Good morning, everyone. Welcome to the first Capital Markets Day of Befesa. My name is Rafael Pérez. I am the Head of Strategy and Investor Relations of Befesa. Today we are running a hybrid event, so we have a fully booked room here in London, and we also are running a virtual event through the webcast. So thank you very much for everybody that is joining us in such an important day for Befesa. Thank you for those that are coming from outside of London, and I know many of you are coming from outside of London, so thank you for making the trip and taking the time. And also thank you for those joining on the webcast. We're very happy to present you today the 5-year growth plan of the company. Last week we celebrated the 5-year anniversary since the IPO. And over that 5-year period, we have been growing the company into a truly global leader in the niches where we operate, with presence in the US, in Europe, and in Asia. We are ready to continue the journey of growth, and we are going to present the details today. The agenda for today, we have put together 2 hours of presentation and 1 hour of Q&A. We will start with our Executive Chairman, Javier Molina, who will take you through the Befesa highlights, the business highlights, and the current market environment. After that, Asier Zarraonandia, to my right, the Chief Executive Officer, will take you through the details of the 5-year growth plan of the company. After that, we will take a break of 15 minutes. After the break, Lehmann, the CFO, will put everything together in the financial highlights. And finally, I will do the ESG presentation, and finally Javier will close the presentation with the final remarks. And finally, we will have 1 hour of Q&A session. For those of you joining virtually, you can use your chat on the screen to send questions virtually. Feel free to send the questions anytime. Don't wait until the end, okay? And I will make sure that I coordinate the questions. Before starting, I think we wanted to show to all of you in premiere the new corporate video of Befesa. So let's go ahead, please, Laura.
There is plenty of talk about sustainability. And at Befesa, we're committed to action. For more than 30 years, Befesa has pioneered sustainable solutions for the steel and aluminium industries. Our mission is to reduce waste and the extraction of natural resources through recycling. In the process, we drive growth and innovation and create social value. We are proud to be a key player in the circular economy. This means we reduce, recycle, recover, and reintroduce materials at scale, helping all of us work towards a more sustainable future. Steel and aluminium have transformed the world we live in, from the transport we use to the buildings we call work or home. But the primary metals we rely on are finite. That's why we work with secondary steel and aluminium producers to reduce the disruptive impact of mining, divert metal residues from the landfill, and protect our natural environment. Today, we manage and recycle more than 2 million tons of hazardous residues, and we produce more than 1.5 million tons of new materials. Befesa is the global leader in hazardous waste recycling for the steel and aluminium industries. We harness German technology and have a leading position in Europe and the US. We are the first company of our kind with a presence in China. And with new regions developing their own environmental regulations, the possibilities for growth are huge. At the heart of our business are our people. With their expertise, we ensure our recycling remains best in class. As new economies grow, so too does the need for stringent environmental regulations. Secondary steel and aluminium production is increasingly important for emerging economies. As the aluminium and steel industry looks to decarbonize their value chain, secondary production is proving to be the winning alternative. The CO2 emissions are significantly lower compared to primary production, which gives countries the chance to grow sustainably. The impact of Befesa goes beyond environmental protection. As we grow, the company generates more jobs, and our involvement in local communities across the world creates important social value. When it comes to protecting our planet, the circular economy can have a huge impact. We are set to make a difference where it really matters, on an industrial scale. Join us on our mission, Befesa.
I hope you like it. I will now hand over to our Executive Chairman, Javier, who will take us through the business highlights and current market environment.
Thanks, Rafael. Good morning, everyone, and welcome to this first ever Befesa Capital Markets Day. I'm really happy to be here with all of you. As you know, we are celebrating our 5th anniversary in the stock exchange, and at the same time, we are doing this first time Investor Day here in London. We are very excited to explain our growth plan to all of you. And we hope we will be able to, in these turbulent times, to convince you that we have a solid company and a great growth opportunity in front of us. So let's, with no further ado, let's start sharing with you the presentation. This is a page I like very much. It's an old page that we presented 5 years ago when we did our IPO. And I think that page is still, and the message that we have in this page are totally alive. We define Befesa as an environmental company that provides service solutions to the steel and the aluminium industry, and favored by a strong environmental megatrend. We have developed a very strong footprints of plants pretty close of our customers. We are, in that sense, global leader in the 3 main markets in our business, in North America, Europe, and Asia. We are, as I said before, we have a very strong footprint of plants. We are pretty close to our customers. We provide long-term service supported by the environmental regulation. As we know, we need environmental regulation to develop our business. And based on this strong environmental regulation, we provide long-term service. And so, thanks to the footprints of our plants, thanks to the long-term service we provide to our customers, we have created high barriers to enter this market. It's really very difficult for any player to enter the markets. At the same time, that's happened for us. We tried before the acquisition of our business in US to enter in the North American market, and that was quite impossible because the market was covered by the local people, and the same happened in the other geographies. So based on all these reasons, high barriers to enter, long-term service, we enjoy a very profitable business, or at least a profitable business. We have a strong cash flow generation, as you know, and which is even more important for us is we have a very resilient business, as we will see later in the presentation. And we have been able to grow the company in the past. Since the IPO we did 5 years ago, we have had a CAGR of more than 6% during the last 5 years, investing, as we will see later on, around 500 million euros. And we have, again, an opportunity to do that in the future. We will like to focus this Investor Day in the growth opportunities. But before to do that, as I understand that everybody is concerned with the short term, with the turbulent times we are living, I would like to try to convince you that we have a very solid company that will be able to, without any doubt, to overcome this new crisis. I like very much this slide because you can see the evolution of Befesa during the last 15 years. In this period, we have passed at least 2 big crises. We are now probably living the third one, the financial crisis of 2008-2009, and the COVID crisis of 2020. And if you see the slide, you can see that our EBITDA margin has been always between 19 to 25%. And Well, we were able to do that in 2009. We did the same in 2020, and we are going to do the same in this crisis. And no matter how deep is the crisis, our resilient business model permits us to navigate all these turbulent periods successfully. And as I was telling, in that case, will be the same. In last April, we gave you the guidance for this year from 220 to 270 million euros of EBITDA for the whole 2022. I remember at that time to have big internal discussions about the range of the guidance. Some people was recommending us to increase or to reduce the range, and hopefully we decide at that time to provide a wide range. That was based only in the experience. I've been running this company for the last 25 years, and I have learned that the year is very long, the volatility of the commodities is very high, and well, this year is a fantastic example of that. But at the end, we provide a guidance between 220 to 270. We will be in the guidance. Clearly, we will be in the lower part of the range. But I think that again, this year is a good example that Befesa is able to navigate all the crises we are living. If we achieving the lowest part of the range to 220 million euros, that will mean year-on-year growth of 11%. That, I think, in a period like that is not a bad figure. And we will be able to at the same time, we have been able to increase our to have some capex. As you know, we closed in summer the acquisition of the refining business in US, taking the opportunity of the crisis. We reduced seriously the price we paid. We are generating again a strong cash flow, and we will keep our leverage ratio slightly above 2 times. And I don't want to spend too much time in the hedging that Wolf will explain later on during his presentation, but I would like to remark that we have today a very strong hedge book. We have hedged until the end of first quarter of 2025, and only because the hedging book that we have a buffer in our books that represent around 20 million compared to this year in 2023, and around 35 million compared this year in 2024. This is something that we have in our books, and I think that is a very good sign to overcome the period we have in front of us. And before we start to talk about growth, which should be the focus of this presentation, what I would like is to remark that we will close a reasonable 2022 year, and we feel confident looking for the short term, the next year. I don't want to provide the guidance today, for sure. It's something that we will do as always at the end of the first quarter of next year, once we know the treatment charge and once we have a better view about commodity prices, energy prices, etc. But today I would like to send you a message that we feel that we have a solid floor for 2023 in the levels we are going to close the 2022 exercise. A level of 2020-2025 million euros of EBITDA, we feel is a very solid floor for Befesa for next year. We have some tailwinds, basically the hedging book that we have, and I have explained before, and Wolf we will explain later with more detail. We have the acquisition of the US refining plant that will give us some EBITDA next year. We are working very well in the recycling plants of North America. I think the team is doing an extraordinary work, and we feel very comfortable that we will achieve the synergy that we presented to the market of around 20 million. That will start. We are starting to see some synergies this year, but we will see more in the next year. And then we have at the end China, as all of you know, and we have explained in our previous earning calls two weeks ago. We are suffering the COVID situation dramatically in China, and the contribution of our Chinese operation this year will be around close zero, and we hope that the situation will change next year, and we will see some contribution from our Chinese operation. So we have all these tailwinds. We have some headwinds. Let's see what's happening, especially regarding inflation and energy prices. I would like to highlight regarding energy prices. It's always difficult because it depends which kind of comparison you do. Today, we have done an exercise that I was commenting with some of you before to enter this room. If you think in the energy prices in Europe, the price we have today in Germany or in Spain is half of the average price until today of the full year 2022, or only a third of the peak price that we have, or even less than a third of the peak price that we have seen in September. So we are living higher energy price, but who knows which will be the energy price regarding next year. As all of you knows, the gas warehousing in Europe are full, so depend who are you talking about the energy price. You can see some more pessimistic or more optimistic view about that. But anyway, with all the tailwinds that we have, I'm totally sure that we will be able to offset totally the energy pressure we can have in the next year. On top of that, for example, in our aluminum business, we have been able to, or we are being able to, during this year, to pass through the increase in the prices to our customers. So then we will have all the question marks about commodity prices, treatment charge, etc. But all in all, I feel, again, I would like to remark that we feel very confident that, and again, this is not a guidance, but we have a very solid floor in the level we are going to close for 2023 in the levels we are closing 2022. Well, this is, again, a very classic page for us, but I would like to remark that we have a very strong financial backbone. Again, I've been managing this company for many years, and we have never been in a financial situation as we have today. We have an excellent capital structure. We don't have any financial maturity until July 2026. We have a strong cash on hand. We have a reasonable leverage ratio, and we are achieving a very strong cash flow every year. So, and that will be explained later on with more detail. We are in a fantastic position to finance our growth plan without using only our cash and our cash flow. And what we are going to present to all of you is something that we have done in the past. starting in the IPO 5 years ago, we have invested in this period around 500 million, and we have growth in all the geographies we wanted to grow. We have invested in Europe, we have invested in Asia, we have invested in North America. We have achieved a CAGR of around 6% in the period, no matter the difficult situation we are living this year, and we have been able to do that keeping the leverage ratio of the company around 2 times or slightly above 2 times. And we have, I think, we have converted Befesa in a good example of circular economy and a good example of an ESG leader. And we have, and this will be part of the most important part of the presentation that our new CEO, Asier, is going to do some minutes later. We have, again, favorable megatrends that will support our growth, that like has happened in the past. No matter the turbulent times we're living, the Ukraine war, the energy crisis, I think there is not any doubt that the climate change is a big challenge the world is facing. And based on that, there are some mega trends regarding decarbonization and electric vehicle that, as we will explain later on, will support clearly our growth for the next future. So based on that, we are very excited to present to you today what our friend Wolf has defined as our Sustainable Global Growth Plan, which is a fantastic name. For me, it's easy to say only our growth plan, if you don't mind, Wolf. And I think we have a fantastic growth plan in front of us. I think when I try to remember the message we were sending to the market 5 years ago, I feel today much more sure, much more comfortable with the plan we have in front of us. This is a very strong plan. Later we will see that we are not talking about theoretical opportunities, we are talking about clear opportunities based in market evolution that are on the top of the table, as we will say later, we'll explain later. We are talking about an investment between 400 and 450 million euros that will permit us to increase our EBITDA between 120 to 150 million euros. That will represent around 10% CAGR in the next 5 years, and that will represent more than 20% IRR. It's a very well-balanced growth plan because we are planning to invest in our 3 main geographies. This is North America, which will be, or is being, the first market that where we are investing. It means to invest in the Asia part of the world, basically in China, and we are planning to invest in Europe. 2 years ago, we didn't see growth opportunities in Europe, but today, and we will explain later in more detail, you will see that we have clear growth opportunity in Europe, in the classic Europe, following the decarbonization megatrends. We want to develop this business plan with our own resources, with our own cash and our cash flow, so we don't want to increase our leverage ratio. Our plan will be to reduce the leverage ratio at the end of this period clearly below 2 times. And the last message regarding the growth plan is that we want to manage carefully the timing of the execution of this business plan, adapting the plan to the evolution of the market. I want to, if there is a delay in Europe in the obligation to implement decarbonization, etc., we will have the opportunity to adapt our timing to the market evolution. So we are not going to assume risks regarding timing. We are going to manage carefully the timing of the execution of the plan. And then, before to hand over the presentation to Asier, who is going to explain with more detail the plans, a few words regarding ESG. ESG is a key pillar for our company. We are very proud to be an example of circular economy. As you have seen in the video we have presented today, this is in the center of our business model, and what we want to do is to improve the way we are doing that. It's not only to be a good example of circular economy, but we need to do that in the best possible way. Based on that, we have presented in the last May in our sustainability report a CO2 reduction plan that will permit us to reduce our CO2 emissions 20% in these periods, and we are taking care of all the points regarding ESG. Rafael will later on explain with more detail our ESG position. And with that, I think I can hand over the presentation to Asier. Thanks, Asier.
Thank you very much, Javier. Thank you, all of you, for attending this meeting. Very important for us, of course. Well, let me start with a very important slide, what I think is one of the most important in the presentation, because it's summarizing why and what we are thinking is going to happen in the future. No? The mega trend, which is the decarbonization, which is all around the world, is what is the key aspect for a company like us. All the companies in any industry are working on this decarbonization and process like that, which is very important. In particular, in one of the three industries which are relating with our activity, starting for the steel production. Obviously, this decarbonization trend is coming or affecting them to move to the possibilities of production with less CO2 emissions. This is something clear. We have repeated many times that there are mainly two ways to produce steel. One of those is coming from the root of the concentrates, iron ore, mainly in the blast furnaces. They are, getting this ore, putting together with a lot of coke and they are doing the production on that route. And the other route is the electric arc furnace, which is mainly using the scrap available in the economy, and they are using electricity to produce steel. But the fact is that the electric arc furnace route is 7 times less, or they produce 7 times less emissions of CO2 comparing with the blast furnace. So there is a real trend, a real change of the way that the steel makers are going to produce the steel in the future. It's not on our data, but the idea is that for coming in 2021, of the 29% of the global steel production coming from the electric arc furnace route, is going to come to the 37%, almost 40% of the production of steel are going to come for the electric arc furnace in the year 2030. That for us is an idea that globally we are in the good part of this change. I mean, you know that we are treating the electric arc furnace residues, in this particular case the dust, which is containing zinc material, and this is something that globally is going to affect us, not only in China, but as well is something that affecting to the European market and US market as well. So the steel part of our, as I say, the three main drivers that we always manage with is the steel production, and then zinc production are affecting for this mega trend, right? Decarbonization and energy transition supports as well the zinc consumption. I mean, zinc normally is very well connected to the global the GDP growth because it's very well base metal and is in connection with the steel production as well. But on top of this, there are many factors that affect to the zinc in the future, which is the energy transition, like the offshore wind, the onshore wind and solar panels. They are going to need more zinc in the future as well. So from this side as well, steel production, we are in the good side. And in the zinc production means that the zinc materials we are going to produce during the next 5 years are going to be the market is going to be able to capture and to use at the end of the day. No? So basically the zinc part is as well following this trend in the energy transition. And last but not least is the aluminium evolution, right? Well, as Javier said before, the growth of Befesa in the last 5 years has been based basically in the industry of steel dust recycling and a little bit less in the aluminium, which has been doing plants and so in Germany. But we see now that there is a real and very important growth in the aluminium business, especially in Europe. And this is mainly driven by the, once again, decarbonization and electrical vehicle production that is expected to be, booming in the next years. No? In that, the electrical vehicles need light vehicles in order to be more efficiency and to increase the life of the batteries. And basically, this is something that cannot be turned off. At the end of the day, it's going to be for numbers of electrical vehicles in the future, which is going to be 5 times that the current number there is now, arriving to 11 million in Europe in 2030. But as well, the aluminium content in the electric car is going to be higher than now. The data are coming from 174 in 2019 to more than 250 or 249 in 2030. So that means that they are only in Europe, and because the automotive market is going to be more than 2 million tons of aluminium. We will see later how we will going to manage this. Let me turn now to the projects we have in the steel dust recycling, and I would like to start by US. As Rafa and Javier said a couple of times, you know that we are now present in the US market as we acquired the recycling asset of the Americans in recycling last year. US always has been a very attractive market for us, and the reason is because this is a market for the steel production where the electrical furnace route, as I said before, the interesting one for us, is more than 70% of the production of steel is coming from this route in this country. But there are 2 facts that are supporting our plans there. One is decarbonization, as we said before. This is a global trend, and it's something that is happening there, and they are turning off from the electric blast furnace to electrical furnace. Some US Steel and other players are changing blast furnace capacity for electrical furnace, but as well, and moreover, the infrastructure plan the government in the US has approved in the range of $1.2 trillion on infrastructure project supports a lot of already announced and in place projects for increase the steel production capacity or steel production in US. You can see there that we have identified in the range of 9 to 10 million capex investment with 13 to 14 million tons of steel coming in 24 or 25 new production in US. That means for us in the range of 300,000 tons of dust available in the market again. So what we want to do here is that to capture this part of this increase, we are estimating that we are able to take in the range of 200,000 tons of this increased capacity. We have advanced conversation, agreement, letter of intent with players that are announcing this because they are approaching us to, if we are able to treat this extra dust that they are coming, and obviously we are prepared for that. What we intend to invest, or is included in this plan, there are 2 investments in US. One, it will be a surprise, but it's the acquiring of the the refining facility. That has been the opportunity to be closed in September. We have already done. It was included in the plan. And it's something that was coming from last year, where we have the 7% and the option to acquire the rest of the investment at the smelting plant. Well, the opportunity to get with a good discount price that has arisen in September, so we have already done, and we talk about it later. Second part of the investment is we are thinking to refurbish and debottlenecking the capacity we have in an old plant in US, which is Palmerton. So with these two investments in the range of 110 to 120 million, probably will be in a good position to capture this growth of 200,000 tons of dust with state-of-the-art capacity rather than the current old capacity of production that we have there. So here the idea is to refurbish the plant in Palmerton, the two kilns, to get this 200,000 tons of capacity together with the refining of zinc asset that we have acquired recently. In the case of the US refining asset, well, it's more than said that we have explained that we have acquired for the 47 million, which I think is a good price for an asset that we were estimating in the last year in the range of 140 million. So for us has been a very good achievement because for us it's strategic to have this asset in the US. In North America, there is a lack of smelting capacity, and obviously to have this asset and this attractive price as well make us possible or available to allocate all our works production and to put in this refinery and produce green zinc. Well, this is an important concept as well because the green zinc is coming from proper waste of the steel makers they are generating, and they are going through a recycler like Befesa that is putting back zinc metal on the route, in this case coming only for residues, which is something that is the first time nobody's going to do. So fit very, very well with our sustainable view and our sustainable business. This is something that is very welcome from the steel makers in US, because once again they are affected by the decarbonization ideas and they need to comply and to be sustainable and to the plans of doing the things greener. I think that is something that is very welcome for us, and for us became very important in this particular market. As I said before, second part of the investment is going to be in the Palmerton. We are going to do an integral change of this production facility, and we are going to build there two kilns with 200,000 tons of capacity during the year 23 and 24 to be ready to capture, as we said before, the 300 or part of these 300,000 tons that the projects already announced by the steel makers in US are going to put in place in 24, 25. So basically we are going to refurbish the whole interior plant, and probably we are going to increase something the theoretical capacity that we have now in place. And what we do hope is that with these changes we can get more efficiencies, more synergies out of the normal or the initial 20 million that Javier said before. Here we are going to put a state-of-the-art with the Befesa style in US, so probably we are going to catch up a big part of the efficiencies that are still pending to capture in the US in the next 2-3 years. So this is from one side, this capture the growth of the market, and as well to win efficiency in these operations in US. So we are really excited, and this is really the main target we have, and we are going to start in 23. Let's move to Europe in the steel industry. Well, again, here is a little bit different, although the markets seems to be similar, US and Europe. Here in Europe is a different market in the steel industry. The electric arc furnace route used current days in Europe is in the range of 45%. 45% of the steel industry or the steel production is coming from the electric arc furnace route. Remember that in the US we talk about 70%. But here in Europe is the decarbonization and the cutting of the CO2 emissions and the pressure for the politics, for the social pressures or whatever is making more and more strong the idea of decarbonization, of the reduced emissions. So there are a lot of projects coming, as you can see in the slide, which are switching blast furnace capacity to electric arc furnace. You can see that there are in the range of 14 to 15 billion investment for more than 20 million tons of steel production, which are going to come, in this case, from 25 onwards, with a new production for the steel production through the electrical furnace route. This is very good for us as well, and makes us to think in the last years, as Javier said, many questions coming from the financial market say why you don't, well, what is going to happen in Europe is going to decrease the production, it's going to be problems for you guys in the future. Well, now we can say that is really, there is a change coming from this fact of the decarbonization, meaning that not only is not going to be a decrease in the production of steel production in Europe for the electrical furnace, more than that is going to be a growth. That's why, for the first time in years, we have now a particular and specific plan to grow in Europe, because we understand that for this project is going to be again an increase of dust available in the market in the range of 350,000 tons. So, because we have almost the 50% of the market, we have to be, or we are ready to capture half at least of this dust capacity which is going to come to the market. We are not thinking to sell the idea to we are going to capture everything or a big part, but at least the 50% of the increase of dust availability in the European market, we are ready, and as well we are discussing with the players that we have seen in the previous page about the necessity they are going to have to treat the residues, and we are ready to organize the construction of a new kiln, basically a big one in the range of 140 to 160,000 tons of capacity. This is going to be something that we will build in the next years. And together with this, we need more washing capacity for the product we are going to produce. So the investment in Europe is going to be in the range of between 100, 150 million, 105, 150 million euro between the two assets, which will deliver in the range of 30 to 35 million of incremental EBITDA, thanks to the investment we are going to do here. We, of course, as Javier said, we can accommodate when and how we are going to build this. We are planning to do the construction and ramp up of the mill during the plan between 25 and 26 to be ready at the end of 26 to be producing new works in this plant, and more or less the same time doing for the works washing capacity plan during this period of 25-26. This is because, once again, we are following the announcement and the investment of the steel makers are doing with the new capacity. So that's why we had to do the same time the investment we are planning to do. As Javier said, we can always manage this if there are delays or the announcement of the decarbonization process, which is, I personally think that this particular turbulent time is not going to affect to the trend, because the ideas of reduction of emissions are there, the investments are there, all the plans from the European Union to support the big investment the industries are doing are there. So we do think that no matter the particular difficult times that we are facing now, in the next years, this is not going to be problems to follow up the trend. So we think that it's a realistic time to build, and that's why we are starting to work in the permits and in the locations to start with the furnace and with the increased capacity of the washing. So this is the plan for the European market. And we can move to the Chinese market as well. Well, here, decarbonization is a trend that is coming from the last years as well. And the switching from blast furnaces to electrical furnaces is something that we have been telling you in the past as well. This is coming from environmental reasons in China as well, the decarbonization, but as well they have facing a lot of problems with the contamination and with the problems creating, but this big industry, very old-fashioned industry. So there is a trend which is now reinforcing because the idea of decarbonization, but it's something that in China, well, they are working for the last years. We have identified more than 43 projects. In this case, we are putting here the provinces where the projects are coming in. And this means that it's going to be more than 60 million electrical furnace steel production capacity increase in the next years, which means basically 1 million tons of electrical furnace dust, which basically is like a US or European market, just only with this increase of capacity in China. We are in China already, you obviously know, and despite the fact that the COVID zero policy and the recovery after the COVID zero policy and the current Chinese situation of the economy and the low recovery factor, and what Javier said before, that we are having some delay this year for the production in China, we do think that there is still a space for our growth there. Probably not a very aggressive growth there, but a very realistic one. And we can say that now what we have in front of us is after the put in place the two plants that we have currently there, one in Jiangsu province and the other one in the Henan province. Well, we have now allocated a new location, is in Guangdong, where we have agreements with the authorities to build a new kiln, a new plant there, starting for one kiln. And this is basically the next step we are going to do in China. The idea, once again, is to come to capture and to get in the range of 15 to 20% of the huge market of the Chinese steel dust market, how to say. And in this case, I think that we can manage, and here we have to do carefully the timing for the investments. I mean, we have in front of us 23 to prepare engineering and to think and which kind of plant we are going to build there and how the market is back for the current problems they have. The difference of the project we have in front of us in Guangdong is that we are now in this province with the hands of the steel makers there. This is coming, and then we have been going to the authorities. I mean, they feel different. In the past, we were having the green light for the authorities. We were welcome to the Jiangsu province and to the Henan province because it's needed, because the big production of steel dust in the area. In this case, it's because some of our customers, a group of steel makers that have facilities in other provinces. In this case, we are going with them, and even we are going to sign letter of intent or even the contracts before even produce or construct the plant. So we have there, before start, a very high percentage of the steel dust capacity fulfilled with contracts with the steel makers, which is making us very, very well excited and supportive of the project. Other thing is when. I mean, probably I don't know if it has sense to start very fast or not until we have a real view of what's coming in China. But the idea, obviously, is to work during the 23 and to see where or when we can start. In any case, what we plan is basically do the design, do the permits, close the acquisition of the land very soon, even now in 22, and then monitoring during 23 when we start to push the construction that we expect to do during 24. This is the first idea. After this, the target is to grow with another 2 kilns. In this case, no new plants, but new capacity in the current plants. If you ask me where, probably the second one is going to come mainly in Guangdong, because there is, as I said before, there is a lot of capacity already in place, and there are plans to grow the capacity for steel production. So probably in Guangdong could be the second, as a very, one after the other, and probably the third one will come more sure in Jiangsu. So we are planning to have 3 new kilns in the Chinese geography, which is basically what we are including in this growth plan. Let me say that in China, we realize that there is a concern about what is going to happen. For us, there is no doubt. The same that we have been saying in Europe, decarbonization plan is going to be there no matter the current times. In China, no matter what is happening today, well, it's the half of production or the half of consumption of everything. Every metal, starting for the steel production, zinc production, aluminum, the half of it is coming in China. So we do think that it's very difficult to live without China in an industry that aspires to be global, which is the case of Befesa. So we are here for long term. So despite the problems in the current moments, we think that the future it is going to be at least enough to capture these three kilns, and later we will see more. No? So we are going to do this carefully, as we have done the first two investments. You probably are aware that we are investing with a leverage of 50% with local financing in the country. This is the intention to do for the new investments as well. And the equity that we are delivering in China, we are having an insurance for the German government. So in this case, we are not saying that we are going to go through China like a massive way, a massive plan. We have never said that. And basically, we are monitoring very carefully the investment in China. But again, we still think that with this particular project in Guangdong, it is very well, on a strong commitment for steel makers, and we have the visibility that that's going to be there. No? And we, as Javier say, hope that the 23 is a year where the activity there is going to be, or is going to come to normal basis again. So this is on the steel dust service part, which, as I said before, is the main focus of our investment in the past, and looks as well now because it's a big part of the business for the new growth plan that we have in front of us. But it's true that in the aluminium business, in the aluminium salt slag recycling business, there is a real opportunity as well to develop the business further. And this is, as I anticipated before, the electrical vehicles and the decarbonization mega trend in the automotive sector. No? I anticipate that the electrical vehicles are going to be coming from 2 million currently to 2030. This is something that the European Union has already approved, that for 2030, 2035, there is not going to be more engines of combustion cars. So this is something that is not telling by Befesa. It's like the reality in Europe is coming like this. So there is no doubt that means more aluminium on the market, specifically, and we are focusing the European one. No? For that, because not only the number of the electric vehicles that is going to be in place, because those rules, but as well because the need of the aluminium needed in the car, I anticipated before, is going to be, grow a lot, which means at the end of the day, that is going to be more than 3 million tons of aluminium more in the next 5 to 6 years. So if we think in the aluminium sector, normally we are talking about primary aluminium, which is coming to the cars and the automotive industry. But that means we know that the secondary aluminium, which is an industry around the primary one, treating the residues, producing alloys, is going to follow the trend that the primary aluminium is going to have. So basically the same growth that we see in the aluminium general industry is going to come to the recycling or the recycling aluminium, the secondary alloys aluminium production. And then, as a consequence of this, because the way of producing these aluminium alloys, they are going to be producing the salt slag residues, which you probably know that is one of our very specific and important business that we are producing, that we are running, where we have almost the 50% of the European market. And what we intend to do is to keep this percentage capturing the growth of the aluminium production, aluminium secondary production, and as well the salt slag recycling in the future. That's why we have basically 2 projects, or 1 project in the aluminium business, meaning first the expansion of the secondary aluminum plant that we have in Germany, in Bernburg. We are going to increase the capacity of this plant in the 90,000 tons of production. We are going to start in 23 with the permitting and the engineering and the process for the construct and for do this investment. That we hope that in 25 we will be ready to put in ramp up and produce these 90,000 tons. And in parallel, we will start with the new state-of-the-art salt slag plant recycling in Europe as well, to treat mainly part of this salt slag that we internally are going to produce, but as well the rest of the players are going to produce in the market, which I say there is going to be an increase of production of aluminum alloys. So with these two assets, we are going to spend in the range of 80 to 90 million euros of total investment, with this coming with a 15 to 20 million total of incremental EBITDA. This is the plan we have for the aluminium business, and we are very happy and proud that we are now growing only in all the geographies, but as well in all the business that we are running. So the growth plan is covering this. I mean, it's covering basically and really the full footprint of the activities of Befesa. No? Starting for a kind of summarizing of what we are doing, this is the picture and a slide that is giving to you an idea of the whole plan, what we are going to do. No? The US investments with the thin refining and capacity utilization, starting in 23 and putting in place for second part of 24 of 25 the new capacity with a capex in the range of 110 to 120. An EBITDA of 35 to 45, meaning a payback of 3 to 4 years on IRR of 30%. This is the US projects, as explained before, and this is the first that we are going to start immediately in 2023. The growth plan in Europe is coming basically with electrical furnace plant and the washing capacity enlargement, and as I said before, are going to come for the 25 or 26 period of construction and ramping up, capturing it basically in 26, 27, starting the production. We estimate a CapEx in between 105 to 115, EBITDA level of 30 to 35, another payback of 3-4 years with an IRR of 30%. Then we have the China growth plan with the 3 new kilns, where the construction here tentatively is, as I said before, starting in 23 and mainly 24 for the construction, and for 25 onwards start to capture the production of the payback of the investment, and then every 6 months, more or less 6 months later, come in the other investments. Total investment of 115 to 125, EBITDA run rate of the 30-35, payback of 4 to 5 years, and IRR of 20% more or less. And last, again, but not least, is the aluminium expansion with the secondary aluminium expansion capacity in Bernburg and the salt slag plant, which we want to be ready for 26 onwards. And the capex investment will be in the 80 to 90 millions with an EBITDA of 15 to 20, a payback of 5 years more or less, and IRR of 15. Total, as Javier said before, in the range of 410 to 450 million, with an EBITDA in the range of 110 to 135, and a payback in 3-4 years with an IRR above 20%. This is basically the summary of the plan that we have in front of us. Very exciting period for us, but I agree with Javier that we see this plan very achievable. I mean, it's not something like we can say that is our guess or our desire to do. Here, we really are working basically with all the agents involved here, steel makers and steel producers and others, and we see really this plan achievable in front for us with a lot of work for sure, but I think that we are going to get, despite the fact that the current situation is. No? Putting everything together, and probably not by casualty, but as you see, we are in front of us, we have an investment in a roadmap, including even the two plants that are going to produce EBITDA finally next year for us. We are having very well balanced among the three big geographies where Befesa is now globally the growth plan, right? It is in the range of 35 to 45 million EBITDA growth, for coming from the US market with the announced investments. And then 45 to 55 in Europe with the steel dust recycling investment, like the new kiln and the washing facility. And as well, the aluminium salt slag and the aluminium expansion for the secondary aluminium production. And then in China, we will have in front of us in the range of 45 to 55, including the 3 new kilns, as well the 2 that already are there. So all in all, we have in front of us a future where the three main markets that we are going to have are going to contribute this global plan with a very sustainable and important growth that we have in front of us for the next 5 years. So we'll represent between 120 to 150 million additional EBITDA over the next 5 years. The most important idea as well is we can accommodate the timing. We have the plans in front of us to follow like we are explaining, but we are not. We have no commitments, nothing close that we have to be forced to construct the new projects. If we see that the things are coming a little bit later than is expected, although we don't think so, but we can accommodate our growth plan to the reality that is going to come in these next years. No? So basically, I think is the main ideas about the growth plan. Rafa, we can do the.
Yes, here. I think we are a little bit ahead of time, but let's take a 15-minute break now, and we will continue after that with Wolf Lehmann taking us through the financial highlights.
I appreciate it.
Wolf Lehmann, the CFO of Befesa, will put everything together in the financial highlights.
Great, thank you, Rafael. So on this page, we start on the left-hand side with our current 225 million last 12 months trailing EBITDA run rate. Asier walked you through the 125 to 155 million euros growth projects. And those growth projects primarily focus on our core businesses. Thus, they come with our proven 19 to 23% EBITDA margin, which turns into adding approximately 550 to 700 million euros of revenue. Later on, I have a page on leverage and on cash, and I will show you how we can self-fund this growth plan and keeping leverage in the initial years around 2, and thereafter we deliver. Also on the next page, we'll take a look at energy prices as well as metal prices, which we expect to normalize in the medium term. Now, quite frankly, if you look at more than 20 years, over the last 20 years, energy prices and metal prices showed a very, very strong correlation. The only exception to that has been the last quarters, the European energy crisis. And even in that very exceptional European energy crisis, when you look at our last 9 months financials, we entirely offset more than 50 million of inflation with prices, metal prices, 51 million. Now, on the other hand, Asier and Javier talked about that in the last weeks, energy prices rapidly came down and decreased materially. And this is also what we expect. And in the medium term, the strong correlation we saw over the last 20 years will come back, and we see again a very strong correlation between metal prices and energy prices. Now, we cannot forecast energy prices nor metal prices, but on the next page, I will take you through our latest hedge book and also how we manage the variability. Now, our zinc, quite frankly, it starts at the bottom, which is our hedging strategy. Our hedging strategy is entirely unchanged. 1 to 3 years in terms of forwards, in terms of time, 60 to 75% of zinc equivalent volume, and important, no collaterals, no margin calls. Now, when you look at prices, Javier already mentioned, if you go into next year, 2023, we've hedged at about 2,500 euros. That is 125 euros higher than this year. Doesn't sound much, but you need to multiply with more than 150,000 tons. So that turns into 19 million euros incremental EBITDA year over year. If you do the same math for the following year, for 2024, we have hedged on average at 2,600 euros per ton. That's 225 euros per ton higher than this year, which turns into 34 million euros incremental EBITDA. Yeah? Now, we don't hedge to increase profits. We hedge to stabilize, and ultimately we lock in our earnings and our cash flow at a much tighter bandwidth. That's why we hedge. Nevertheless, that 34 million euros incremental EBITDA we got in the pocket, and that will serve us well to offset pressures, headwinds, as Asier and Javier mentioned, could be inflation or any other matter. Now, on the next page, I would like to take you through and spend some time on how we're going to fund our growth plan, Sustainable Global Growth Plan, SGGP, and how we self-fund that. Now, number one, self-fund. Number two, no capital increase. We have not planned that. Now, what we have on the page is really an illustrative EBITDA to cash flow walk. On the left-hand side, we start with EBITDA. Now, our baseline, the actual 225 million last 12 months trailing EBITDA run rate. Obviously note that over the next years, this will increase by 125 to 155 million euros as explained. The next bucket, and this is the walk that you get every quarter from us. Yeah? So the next bucket is working capital and other. If you look at what we've done in the last 5 years, we always had a medium, a minor working capital usage to fund growth. And this is also what we expect over the next years. If you look at the last 5 years and you normalize for the one-time costs like IPO and also the acquisition, etc., then you get to approximately 16 million euros working capital usage on average per year to fund growth. Now let's talk about the next bucket then is interest cost. On interest, a couple of aspects. Number one, our capital structure is set for the majority of the growth plan period, all the way up to July 2026. Then let's look at the rates. How does it work? It is 3 months Euribor, 0% floor, plus a spread. The spread cannot be more than 200 basis points. So for leverage at or above 2.25 times, it's 200 basis points, and it cannot go beyond that. That's number one. Now, as we delever, or for example, if we are between 2 and 2.25 times leverage, that spread becomes 175 basis points. And if we are below 2 times leverage, the spread becomes 150 basis points, etc. So we have interest rates, ratchets built in, and as we delever, it's beneficial to us. The second very important aspect is that half of our term loan B, we have swapped from variable to fixed. So all we read about the ECB, European Central Bank increases, they only impact half of our gross debt. And that's 313 million euros, half of our gross debt. So every 1% or 100 basis points increase by the ECB ultimately triggers about 3 million euros incremental interest cost. Nevertheless, the other aspect is we have cash. For quite some time, we didn't get any interest on our cash deposits. Now we're getting interest again. So, and if you take that moderately into consideration, I think every 100 basis points or 1% increase by the ECB is not 3 million, it's 2.5 million or so, because obviously we're getting some cash interest on our deposits. No? Next bucket, taxes. Quite frankly, on taxes, we continue our tax efficiencies that we've shown in the last years. Please note, we have more than 170 million euros on and off books tax credits. That serves us well over the coming years. And if you do the math, over the last 3 years, I believe, on average, a tax rate of 19%. And we don't see any reasons why our tax efficiency would be worse than that. Let's switch over then into the CapEx bucket, maintenance and growth. On maintenance, a normal year with 40 million euros, we get absolutely done. That suffices. And maintenance in a broader sense. It is classic maintenance to maintain all our assets at top notch. It's also IT spend, compliance spend, productivity spend, etc. Now, if you want, you could take that up a little bit over the next years into the outer years as more and more plants are coming online. But starting point should be somewhere around 40 million maintenance CapEx. And then on growth CapEx, I think we covered that in a lot of detail. Yeah, so that is the 410 to 450 million euros that Asier explained. Over 5-year term, so you're talking somewhere around 80 to 90 million euros growth CapEx per year on average. Dividends, we continue our dividend policy. We distributed, or our policy is to distribute between 40 to 50% of our net profit we distribute as a dividend. If you take all the last 5 years, we exactly distributed 52%. So our target is to continue that, to pay out 40 to 50% of net profit as a dividend. So overall, we will continue to manage cash flow very carefully. We see clearly a balanced cash flow over the initial years of our growth plan. And we see that we're going to delever in the outer years rapidly. And we can self-fund this growth plan, continue our dividend policy, and are really looking forward to executing this growth plan. On this page, we show the development of our portfolio, capacity, utilization rates, volume. We will continue to diversify the portfolio and globally. So on capacity, steel dust, we're growing it to more than 2.1 million tons of capacity globally. Zinc refining, our new asset, is on top of that. And if you look at aluminum, our aluminum business combined is approaching 0.9 million tons of recycling capacity. If you look at our total business, we're talking about more than 3 million tons of recycling capacity. This is what we had mentioned some years ago, that this is what we're striving for, And this is what we're executing now. On utilization rates, quite frankly, we're using or expecting our proven historical utilization rates. And volume is purely taking capacity times our proven utilization rates, and that spits out the volume that we're going to achieve. Now, on this one, we're looking at how revenue and EBITDA and margins develop. The pro forma post SGGP, post our growth plan, EBITDA and revenue is just basically taking simply our current run rate plus the growth plan we just talked to you about, and that gets us to the post SGGP pro forma numbers. Thus, the revenue we see growing to 1.6 to 1.8 billion euros. EBITDA growing to above 350 million euros. And on the EBITDA margin, we see our proven 19 to 23% EBITDA margin. Here, a little bit more flavor. You know, when you look at our zinc refining as well as secondary aluminum business, which are usually the lower EBITDA margin percentage businesses, we clearly see a solid single-digit EBITDA percent. And on our core business, and this growth plan is centered around our core business, we see continued strong performance like we've done in the past. So you know the EBITDA percent on average we achieve in steel dust and in salt slags. You know, summarizing the financial section before we turn with Rafael to the ESG side. Javier mentioned it already. We are in the strongest shape we've ever been. Yeah? This is really based on 3 pillars. It is our long-term capital structure, it is our hedge book, and it is how we manage liquidity and cash flow. With that, we know we can fund this growth plan self-funded. Secondly, we don't expect a capital increase, and we target to continue our distribution approach of 40 to 50% payout of our net profit as a dividend. And 3 and 4 kind of combined, our growth plan is organic, and Asier and Javier mentioned it, and it's based on our core business. So that comes with 2 important aspects. Number 1, timing and flexibility. It's an organic growth plan. The timing and flexibility is fully in our control. We can pull something in 6 months or push it out 6 months based on what is going on in the world. And secondly, from a financial point of view, growing in our core business means the lowest risk and the highest returns we can achieve at Befesa. Yeah? And in some of our core business, quite frankly, we have waited for 20 years for the situation we're facing now. If you look at Europe, we haven't put a single new plant into Europe for the last 20 years. This is fantastic for us, and this is our home market. This is the lowest risk and the highest return we can deliver. And so now, next is, we're going to take this 5-year growth plan, integrate the SGGP into our budget, into our guidance process, and we'll keep you posted step by step over the next quarters to come. But trust us, what is on the pages is what we're executing. Yeah? So for us, it's really, these are difficult times, but this is our commitment to grow through the cycle point. Yeah? This is our commitment. This is what we're going to execute over the next years to come. So next, Rafael, please, takes us through ESG.
Although the focus of today is growth, we wanted to include a section about ESG. Because to some extent, ESG and sustainability have been present during the entire presentation. The growth that Asier has been explaining is driven by decarbonization, transition to a low carbon economy is probably one of the most important topics within the ESG arena. When we IPO Befesa back 5 years ago, ESG was not in the agenda of the capital markets, not in the agenda of Befesa. I remember that we didn't have any single question about ESG, and today it's a very important topic. And during the last 5 years, we have improved significantly the reporting, the transparency on the non-financial information. Today we have 7 ratings on ESG. These are external parties that evaluate our environmental, social, and governance aspect, and we have very good scores in these ratings. We did a materiality assessment. We took the internal view, and we tried to classify and prioritize all the key ESG topics based on the opinion of the most relevant internal people. And we also took the external view of our main shareholder and stakeholders. We came to the conclusion that health and safety was ranking one of the most important topics. It is true, 90% of our people are working in heavy-duty industrial environments, so preserving the health and the safety of these workers is essential for us. We have been able to reduce the lost time injury rate by 85% over the last 7 years. We have done a CO2 holistic analysis. This is a life cycle analysis. Basically, what we have, we engage a top management consulting to say what would happen if Befesa wouldn't exist, which is the alternative. We have analyzed business by business our CO2 footprint versus the alternative. In this case, the alternative is basically a combination of landfill and mining. And we came to the conclusion that with our operations, we are saving around 2.4 million tons of CO2 per year. But we also recognize that we are CO2 producers, and we have our own CO2 reduction plan, which I will take you through in the next pages. On the EU taxonomy, as you know, this is an European regulation which is still not complete. We believe that we fulfill 100% of the objectives around circular economy, according to the opinion of subject matter experts and third parties, 100% on revenue, capex and opex. And finally, we have put together a sustainability committee comprising experienced members of the board with a lot of experience on the ESG field, energy transition and technology. And this committee will supervise all the ESG topics within the company with a special focus on the CO2 reduction plan. Well, since the very beginning, sustainability has been at the core of Befesa. We have always been driven for the last 30 years by environmental regulation, and as Asier has explained, the future growth will be based on another sustainability topic like decarbonization. We are a pure circular economy player, and we basically avoid the landfill of more than 2 million tons of hazardous waste. We recover 1.5 million tons of valuable materials that we reintroduce into the economy. Basically, we are avoiding the extraction of primary materials and avoiding the emissions of CO2. But we also have some indirect benefits. As you know, our customers are the steel and aluminum producers that are the less pollutant. The EAF steel players produce 1/7 of CO2 compared to primary producers. And in the case of aluminum, to produce 1 ton of secondary aluminum, you need 5% the energy that you need to produce 1 ton of primary aluminum. So we are clearly enabling the transition to a low economy in the steel and the aluminum industry. But as I say, we recognize that we have our own emissions, and we are committed to reduce our own emissions. This is what we have communicated to the market. Our commitment is to reduce 20% our emissions by 2030, and we also have the vision or the ambition to reach net zero by 2050. Well, if you look at our CO2 emissions today, 90% is coming from the steel dust business. It makes sense because that is the main business of Befesa. It contributes with around 85% of the total EBITDA of the company. Out of that, around 80% is coming from the use of reductant agents, mainly coke, in the steel dust business. 10% is coming from the use of fuels, mainly natural gas, in the secondary aluminum business. And the other 10% is the use of electricity, what we call Scope 2 emissions. Our CO2 reduction plan is based mainly on 3 levers. The first one is green power sourcing. If you look at our electricity bill today, only 20% is coming from renewable power. Okay, we have the opportunity to increase that all the way to 80%. In markets where we have strong operations like Spain, like Germany, like the US, we are engaging with third parties to sign long-term PPAs. That is the first lever. The second one is operational efficiency on the energy side. Okay, and here we have a bunch of lists that we are of initiatives that we are pursuing. Probably the most obvious one is when you compare the energy intensity or the carbon efficiency of our different plants, you see a big opportunity on the recently acquired American operations. Okay, so we are bringing the American plants to the same standard that we have in Europe. And finally, the third lever is around raw material substitution. It's around looking for what other materials we could use to substitute coke. For example, we are looking and we are doing trials with bio-coke or charcoal to reduce the carbon footprint. We're also looking at green hydrogen to substitute partially the natural gas that we use in our secondary aluminum business. And then we have the vision to, or the aspiration to achieve net zero by 2050. This is something that will not depend entirely on Befesa. It will depend also on the development of new technologies, carbon capture technologies, new technologies to recycle the waste that we treat, or new technologies to produce coke with low carbon emissions. And finally, what we have here is a nice of selected targets that will strengthen even more our ESG profile. I'm not going to go through all of them. The first 2 ones, waste recycle and new materials recovered. This is 100% aligned with the strategy that we have explained to you today. As we grow our capacity, we will fulfill these targets because basically this is what we do day in and out. On the CO2 emissions, I have already explained. I would say here that we are also aiming at measuring and reporting Scope 3 emissions, which is something that we are not doing at the moment. On the health and safety, we want to keep on improving, and we want to keep the 0 fatalities goal as a main target. And finally, other goals on the governance side. So this should be reflected in our ESG ratings. Much of this is coming from the conversations and the engagement that we are having with our shareholders. So thank you for your feedback, and looking forward to keeping the engagement and the dialogue on the ESG side. Back now to Javier for the closing remarks.
Okay. I hope that this section has been interesting for all of you. And before to enter in the Q&A, I would like to summarize and to remark the most relevant message we have been trying to send to all of you. First one is that we are a very resilient company. I think that is something that everybody agree. We have been able to pass through the different crises we have been living in the past, and for sure we are going to do the same in this crisis. Based on that, we can confirm again that we will finish the year in the guidance, for sure in the lower part of the range, but we will be on the guidance that we provide to the market 10 months ago, as we have done all the years since our IPO. The second idea is that we have a solid floor for 2023. in the levels we will achieve in 2022. Again, this is not a guidance. We will provide the guidance in the right time. But, well, I would like to send a message to all of you that the company is not in risk. We will overcome this crisis with any doubt and achieving good results, a strong cash flow, and for sure a strong net profit. And based on that, we will be able to pay, as always, the dividend that we have been paying to our investors since the IPO. And then, I think we have been trying to explain during the presentation the strong mega trends that are supporting our business model. I think everybody will agree that these mega trends are on the top of the table. The decarbonization is something real. Electric vehicle, especially in Europe, but in all the geographies, is the future of the automotive industry. And based on that, we will have again a very clear growth opportunity in front of us. And it's a growth opportunity very well balanced in all the geographies we are present. Perhaps 2 years ago or 1 year and a half ago, our growth was based basically in China, and today our growth is very well balanced in all the geographies where we are present. We are not talking about new products, we are not talking about new geographies, we are talking about our core business, the business we have been developing during the last 30 years, so we know very well how to build, how to run, how to manage steel dust recycling plant, solid slag recycling plant, and we are talking about to growth in this business and in geographies that we know very well. A third of the growth plan is, or more, 40% of the growth plan is based in Europe. It's our natural market where the team feels extremely comfortable. Another third of the business is based in North America, where we have a very strong presence, a very strong team. It's a market, at least in our products, very similar to the European market. And only a third is based in, let's say, a new market. A new market where we are working on for the last 10 years and where we have built successfully 2 plants and where we have started to manage the plant. Now we are living in the middle of the very difficult situation because COVID, because other reasons. But we are very confident that China will be a clear growth market for Befesa. And as Asier has explained, our next project in China will be in a new area, in the province of Guangdong, where we will have signed contracts before to start the constructions of the new investment of the plant. This is a new way to approach our growth in this part of the world, and I think will be in a more secure way than we have done previously. So all in all, we have a very well-balanced plan, and I would like to highlight 2 ideas about this plan. The delivery of the plan is totally on our hands. The plan or the investment don't depend on M&A opportunities, on acquisitions, or no. We only need to confirm that the announced investments of our industries, steel industry and aluminum industry, will be done, and then we will follow the execution of this industry. And this is the second idea. This is a modular plan. We can define the speed of the plan. As Asier has explained, we will start in North America, where we have done the first investment, and where we want to do as soon as possible the bottlenecking of the Palmerton plant, because the market is there and we have an opportunity. Then we think Guangdong will be the second step, and especially in Europe, we will define or set up the speed of the execution to the plan to the market situation. So if we see some delay in the implementation or in the execution of the growth plan for the steel industry or for the aluminum industry, we will moderate the speed of our plan. So all in all, I think because we will grow in our core business in very well-known geography, and we will set up the speed, the timing of the plan, I understand, is a very low risk plan. As Wolf has explained, we are in a very strong financial situation, and we have the possibility. We don't need external funds external cash to fund this plan. We can do the plan clearly with our cash and with our cash flow. And our goal is not only not increase the leverage ratio, but to try to decrease doing the investment plan, but try at the same time decrease the leverage ratio. We will take care, as Rafael has explained, we will take care about ESG. I think we need to do a permanent effort to show the market that we are a fantastic example of circular economy. 1 year ago, the ESG was in the center of all the investment decision. Perhaps today is not happening the same, but I'm sure that ESG will continue to be an important point to define the decisions of our investors, and we will take care of the ESG. And I think we have the right team to develop this plan. I'm very happy with the decision we took some months ago to nominate a CEO in Befesa. Now we have more people to do the same. Asier will be 100% focused in the day-to-day and in the delivery of the plan. And I think we have a very strong team. Asier has a strong team. We have a very good team in North America. We have a very good team in China. In China, we have created a strong team. Today, we have more than 200 people working there, and we have a corporative team which is really strong and that know very well the market. We have a very strong team in all the geographies, South Korea, Turkey, and for sure the classic Europe. This, in December, we will, after the COVID period, we will have our first in-person management meetings since 3 years or 4 years, and will be a great occasion to present the plan to our people and to start the execution of the plan. Finally, I would like to finish trying to transmit you my confidence in this growth plan. I believe in this plan. We believe in this plan, and we are sure that we will be able to deliver on time and on budget as we have done in the past. Thank you very much. And now let's go to Q&A, no?
Thank you, Javier. I think for those here in the room, we have a mic that can be moving around. For those on the virtual session, as I said, there is a box in your screen that you can fill in the question. I will try to moderate those. So we have a question here, Sonia, from Ingo.
Yeah, thank you. Ingo Schachel-Alexan, BNP Paribas. My first question would be on the European steel dust recycling opportunity. I think your chart showed EAF capacity to be added in France, Germany, Scandinavia. When you look at the opportunities for you, would it be fair to say that you are more focused on the countries in which you're already active, like France and Germany, or is Scandinavia an equally likely option for you, and you're fully flexible depending on where that pops up? And in that context, maybe you can also speak about your competitors' appetite for expansion. As you said, there has not been any greenfield activity in the European market for the last few decades. I think you want to maintain a 50% market share, so I guess that means that you also think one of the competitors will also do greenfield. You already know which one and where?
Well, first of all, about the location, probably you're right. I think that we are thinking to grow the capacity around where the steel makers are planning to build the new capacity. So the announcement they are doing is basically there in the area of Germany, France, and so we are thinking in that area, obviously. It's still early to say where, because we are working in a couple of locations, and we will have the delivery of these things during the 23, and we will inform you, because once the plan is set up the plan, we probably follow up with the new things that come to that. So yes, I think it's going to be. We are not thinking to move for the part of Europe or something like that. It's just in the real area where the steel makers are doing. Regarding competition, I cannot answer for them. I don't know. I mean, there are no plans, at least public, and no public neither. No one is announcing, or there are no movements. My personal guessing is that if we capture half of the production, someone is going to capture the rest, right? If we see that the competition is not moving, probably we can do more things in the future. But at the end of the day, I think that, as we are explaining the whole morning, is that something that we have to see how it's coming, right? More than thinking to grow more, probably is thinking the step by step doing ours. No? So we'll see. But I think it's the opportunities there for us and for the rest. So we will see what is coming. No?
On the investment on the salt slags and secondary aluminum side, I think Bernburg has always benefited a lot from proximity to clients in the region. Of course, you're scaling the plant up. Would that change the business model at all? Will you have to sell more to, let's say, export markets to Eastern Europe, or is it still a business model that can monetize the advantage of proximity to suppliers?
The idea here is clearly, well, we are open to do the business in many ways, but one of those is the tooling basis with the primary aluminum industry. Treating the drosses and other aluminium containing material and putting back there. So we are open to export, we are open to filling the market, but we do think that the production and the reality is going to be here in Europe, which is the real growth capacity, so that we have to serve the market. So we are thinking to grow there because it's in a good area, covering the current, European, Central and this part, and as well covering because it's in the part of the East Germany, probably covering the new countries that the automotive industry can cover. So this is the reason why we think that after evaluate all the possibilities, we are thinking to enlarge the capacity in Bernburg rather than build another part. And yes, the idea is to serve the European market.
Just a quick housekeeping on Bernburg. I think the last round of expansion was strongly supported by CapEx subsidies. Do you also expect to receive it this time? And is it included in your CapEx number?
It's not included, but of course we are working on that. The first time you put there, you have the access to these subsidies. Now it's also clear, but we do hope to have part of that.
Okay, thank you.
Thank you for the presentation. Just in terms of the CapEx, that 80 to 90 million that's going on secondary aluminium and salt slags, how much that's going on the secondary aluminium? And is the anticipation that the margins in secondary aluminium improve with that spending, and if so, to what extent?
You go, Wolf.
I think out of the 80, 90, and a small part of that will be around 20. Will be on the at the end will be increased capacity in Bernburg, and the rest will be basically the investment in a secondary aluminium plant. This is more or less the balance between the two investments. 20, around 20 yes. Bernburg, 65 in the secondary aluminum, in the salt slag plant.
Yeah. Okay. And then to the other part of the question, the expansion in Bernburg is a brand new plant. If you look at our secondary aluminum business, currently we have 3 plants, 2 in Spain, 1 in Bernburg. Bernburg is the most modern and last built plant. Traditionally, if you look at the last years, secondary aluminum is single-digit EBITDA. Obviously, there have been years where the Bernburg plant was at the upper end of single-digit, and as we intend to build a brand new plant with the highest efficiency we can do, that doesn't hurt.
The return on the investment in Bernburg has been fantastic because we invest 32, 33 million euros. Out of that, 10 million was a grant from the regional government, and the payback of this investment has been below 3 times. So, and this is what we are trying to do again. And will be, as Asier was explaining before, will be linked to long-term contracts with aluminum producers. So it's a very, let's say, secure investment. Okay?
At the same time, this increase of production in Vermont are going to feed partially the salt slag. So a big part of the capacity of the salt slag plant is going to be covered by the salt slag coming from the plant. So I think, once again, that is very strong and very well, done the project, support the project.
So yes, please. Just to understand, what is the reason behind having a range in investments? Is it related to uncertainty of capex costs coming from inflation? And my second question, more or less the same question, and about EBITDA and expected incremental EBITDA per annum. What are the main assumptions behind the range of incremental EBITDA you gave? And my third question is on slide 44. You mentioned a range of 125 to 150. Is it 150 or 155? Because it's 155 in other pages.
Yeah. Maybe I take that one first, if you don't mind, right?
Yeah.
My fault, my apologies.
You are guilty.
He's the guilty.
Jeez, you're catching every penny.
Oh, just to
no, the correct number is 125 to 155. On the electronic version, you saw 155. In the printout, you see 150. So please scratch out the 0, put a big 5 over that. It's 125 to 155. Darn it, the one error in there you found. Incredible.
Thanks.
And the other two questions about the capex interval. Yes, we are considering now, we are out of the US one, which is more advanced, the project, the Palmerton refurbishment. The rest are estimations. And then with the current prices that we have the idea, and then put, the plus less 10, 15%, it is in concept of they are still in a very basic engineering process, right? So that's why it's more or less the idea. But it's not going to be far from that. Later, we had to run the project, going to the RFQ, asking for quotations and get the final amount. But I think this range is quite accurate by the experience we have, and especially by geographies. And in terms of the media, we were waiting for the question. It is how we calculate, how the modeling. We intentionally are not putting here how we are getting those figures. And the reason behind is that each of you has your own model about what the zinc price is going to be in the 23, 24, 25, how are going to be the TCs, how are going to be the energy. So we think that it's not worth for nothing to put here an idea, because otherwise we are going to start discussing what is going to be the zinc price and so. So I think that you can modelize and see that what we are using behind, Wolf can correct me, is like a kind of last 5 years average on more or less all the variables, and that's what is a range as well. But I'm sure you're gonna do your own model, and you will see that you're not gonna be no far from that, because, well, depends how aggressive you can be, or how positive you see the zinc prices or the others, or how negative you see the energy prices, and so. In reality, we are doing this, as Javier explained, not like a kind of guidance, but just like a kind of idea of the investments and return on investment that we have to present to our board and to you guys, because at the end of the day, the intervals, the range are always affecting our activity. That's why we are putting the guidance on interval and so, because there are many variables which are out of our control. So that's why it is. No? But the idea is get the 5 years average, and more or less you get the numbers that we are using. Mm-hmm.
Yeah. Sorry, I have one more.
Another mistake?
Yeah, go.
No, I'm not sure to get the difference between the range in page 37 of 110 to 135 and the consolidated one of 125 to 150.
I can see you looked at all the pages in detail, yes. The difference is 2 China plants.
Once again, it's golf. Huh?
No, this is clearly done on purpose. The page that Asier presented first is taking the 9 projects and the growth EBITDA and the investment, and we wanted to be fair in how we calculate the returns. Yeah. So if you go a little bit, more, yeah. Yeah.
This one is one, no?
Yeah. Yeah. One more back. This one, perfect. Yeah. So this one you're referring to at the bottom, EBITDA run rate 110 to 135. Then what we talk about for the next 5 years, 125 to 155. The difference is the 2 China plants that are already done, no more investment to do. But as explained, in this year, we kind of have a break even, yeah, and they're going to deliver next year on, etc. That's the difference. But we felt it's fair to leave those 2 out, yeah, because you want to calculate your returns on a like-for-like basis. No?
I have 2 other questions, but
We'll get back to you.
Good afternoon. Sandeep Pitti from Morgan Stanley. I have 3 questions. Firstly, maybe can you highlight what are the contingencies in your growth plan? Is it 10%, 10 million per plant?
Yes, in the range of 10%. We are always considering this in the contingency plan.
Okay, thank you. And secondly, on the AZR acquisition. So at the time of acquisition, you highlighted there are 2 levers. One is synergies, the other is increase in the utilization. And today I was surprised to see that the first investment is to increase the utilization to 617 kiloton. So at the time of acquisition, this was not highlighted. So I just wanted to understand what's happened now. Thank you.
Good point. Yeah, I think it's at the time of acquisition, we explained that the short-term synergies, we call like that, is being focused on operating measures, how to say. No? We are getting this. We have to be ready to do some kind of changes of the current equipments, and the main changes are being doing during this 22. So we are ready to capture more, synergies during 2023 when we are these small equipments changes in place in all the kilns. This is the first idea. In terms of the utilization capacity, yes, you are right. I think we are mixing something like it's a growth capacity or it's a reinforcement of the capacity. I think it's a mixture, right? We know that that the capacity of the plants now at the current stage could be in the range of 620 or something like that, which always is a theoretical, but it's more or less like that in terms of the design of the kilns, how they are operating. But we want to change the ones that we have in Palmerton and do another 2 kilns with the 200,000 capacity to reach something like 640 or 650,000 tons of capacity. So, but for us, this is not the important thing. I mean, we are not doing this for searching the increase of capacity of 20,000 or not. For us, the important thing is to be able to capture the growth of the market, which is a different thing. I mean, now we are running the plant in the range of 65 to 70, the plants, 65-70% of capacity, current capacity, and so we say, if we wait and we don't do anything to capture the 200,000 tons and to bring to 90 to 95,000 tons of capacity utilization in the future, could be very risky because the plants are not in a good state of the art, and probably we are not going to be as much efficiency as we want, because the state of the equipment. So changes the equipment, doing a state-of-the-art kilns, we are going to be, for sure, ready to capture the growth in a good way, to capture more synergies than we were planning. So it's a combination of everything, right?
Mm-hmm. Okay, thank you. And one final question. On China profitability, I see the ranges have been now narrowed to 10 to 11 million per 110 kiloton of capacity versus 8 to 14 million earlier. So what assumptions have changed versus past?
Well, out of the, again, zinc price and those kind of things that probably you are doing, the main difference is that we realized that the fees for the steel makers are a little bit higher than we were thinking on. I mean, this was a brand new market, and then we were considering that how much would you have to pay, so now, or cost, because the transport and so. So all in all, you have to reevaluate, and we are comfortable in the rates to 8 to 12 or to 13 billion. So no big changes in range, but yes, we were in the past probably closer to the high part of the range. Now probably we are in the middle. But at the end, depends on how it's going to be there, the zinc price, treatment charge, and the rest of the cost. For me, this range of 10 to 14 or 10 to 12 is more accurate now because we have the knowledge and we are already running the plans rather than initially because we're on paper, how to say. Now it's on the field, and I think it's more accurate the range that we are running now.
I think we can confirm that the running of Jiangsu plant has been very difficult during all the year. Probably October has been the first month of full operations in the plant, and the performance of the plant is in line with the figures that Asier is talking about. So this is a good point, a good starting point, no?
Andrew Gibbs from Otis Capital. It was a really follow-up. A lot of what he'd just asked, that last question, is what I was trying to look at, was obviously on China, what you're intending to do next bears some reference to what's happened in the past, i.e. when you went out there with China 1 and 2, it was a sort of, we will build it and they will come, and you hoped the contracts would sort of fall in line with what had happened in Europe, and perhaps that didn't quite come through. What you, in the letter of intent you have here with China 3, how close are you to where you wanted to be with 1 and 2? Yeah.
I think I get you. I mean, I was explaining to your colleagues before in the break. The fact here is that the 1 and 2 is that situation, well, a different 1 and 2 because the second one is coming with the commissioning now. But the contracts are in place, and what we are really realizing, more than feeling, is like the deliveries of dust are below the expectation because they are simply stopped. I mean, the steel makers are half for running just weekends, running nights, because, you know, it's an electrical furnace that they can switch off and on. And the fact is that we have the contract in place, but they are not simply producing. We hoped that their months of the economy, Chinese economy is strange, how to say, because there are not a lot of information. They come back to normal production, not needed to grow, and we will fill up the kiln 1 and 2 with the contracts in place. In the case of the third, has been a different animal, although it's more or less the same. But the difference is that one of the biggest customers we have in Jiangsu is part of a big group using a lot of scrap with more than 30% of zinc containing in the dust. And this group has a couple of plants already running in Guangdong. And this is the idea how we have moved there, more than we have found again, and we were searching for new province with the steel production. This case was a different because we were hand to hand with those guys to the president, and then they are inviting us to build, and we are close to the 2 plants. And it is, again, production site is 4 million coming to 8 in one of those, and the other one is 6 coming to 12. If it is true or not, we will see. That's why Guangdong now is becoming the last, but probably is the first when we are going to move for the second kiln. Because if this is, we check on the field that they are producing at such a level, I think it's quite easy for us to move forward. Having said that, we need to wait a little during 23 to see if this is coming back in China, you know, because you have the capacity, you have the production, but the economy is like sleeping. I mean, it's like COVID-0 is the excuse, it's not the excuse. They are stopping, they are very slow recovery. But again, we see that China, you know, population, consumption, and construction infrastructure are not going to be stopped for a while. So when it's coming, well, let's see a little between 23 and we will move forward, you know, pushing a lot or just managing. But when we say we have flexibility, all the flexibility we want. But we are not thinking that it's coming 2 years waiting for something happening in China. We think that it's going to be in the range of the timing we are putting there. And the reason for Guangdong is this.
Right. I certainly appreciate the volumes are the main issue, but within the actual contract terms, do they look like you originally wanted? Or have you had to soften any of those or change collection costs?
No, I mean, well, the collection cost, yes, is one thing that we have to recognize that is a little bit harder than we were expecting, because the theory, there is no one there, so probably you can get even collect fees and so on, but the Chinese war is Chinese war, and the other guys doing things with the waste are taking some money, so you have to pay, whatever. Nothing strange. I mean, still doing very good, profitable business, like in the rest of part of the Asia. This is one thing. But the important thing that we are checking, not again, is realizing is that for 9 contract steel makers that we have, 8 of them are now currently delivering the dust by silo truck. What that means is no return for them. I mean, because they producing the waste and they put in a pneumatic silo, so it's not in the air, and they are going to a recycler in the area. So it's a matter of how much they produce. It's not a matter of they are doing other things, and it's no return way they are doing. So we are really, really happy with the situation, theoretical situation. We are not happy with the level of production they are having. No? So we have to wait a little to see if the economy return, and we have the dust. They are bad, contracts are there, and they are doing pretty well, and the plants are running good.
Yes, it's Oscar Ramos from JP Morgan. I have two questions going back on the previous questions. The first one on the US. So you're debottlenecking Palmerton. Can you comment on how that plant is different to the other three plants? Are they similar, or was Palmerton, did it have more issues? That's the first question. Then the second question, going back to China, what's the visibility on plant 1 and 2 expanding, so into the second and third? You talked about lower volumes now. Do you still see the ability to build that second and third plant in those regions, or is that now pushed away much further?
We're going to the first, Palmerton situation. At the end, belt kilns is a belt kiln everywhere, right? The question is that there are belt kilns coming from the 50s or 40s, and there are not a lot of investment done there, right? So what we can talk about Palmerton is the oldest plant, and the kilns are the oldest one. With a company that passed through not good times in terms of economics, so they have not done a lot of maintenance or changes or whatever. So what we find there is that you can keep running these kilns as they are, but at least it's not the best way to get the efficiencies or even the environmental, requirements and so. So at the end, it's a matter of being very old. You can start to, change parts and try to make a small capex, but we have to analyze and realize that it's better to scratch it and to put the two new ones. This is the reason, and probably because we are going to build in US, European style with our, at the end of the day, no changing everything. So I think it's going to be better we think it's going to be better to build again the plants using, warehouse, using the raw material feeding with modification. But the kilns itself are very old, and all the setting chamber and everything. So the reason is old and probably bad maintenance. This is the idea. Instead of spending capex for maintenance, we prefer to do it once. And the Chinas, if I get the answer is again, I think it's the difference between the 2 and 3rd is that we now are more sure that the dust is there with contracts in place even when we are going to start the kiln, the construction of the kiln. This is different from the previous one. In the previous one, we are still waiting for the evolution of the market to decide if we build the second kiln in Jiangsu or in Henan or wherever. But in the case of Guangdong, if the production of those big guys, together with another 6 or 7 in the area, we realize during 23 that probably can start the second kiln very soon. But we need to check that it's coming back of the production, generally speaking, like we are talking in Jiangsu. I mean, if they are going to run only by nights, only in the weekends, for a while in 23, we have to wait a little, right? So this is what the kind of thing we have to manage. If China come back to a normal steel production, I think that we can speed up in Guangdong because we have the security of the dust more than in the previous plant.
Okay, just going back to the first question. So the other 3 plants are much newer than Palmerton? Okay.
Yes, absolutely, yes. Mm-hmm.
Just additional follow-up on the US. In terms of the zinc refining asset, I understand you got a pretty good deal on it in the end, but how does that kind of fit in with kind of the midterm strategy? Because, it's really not a core part of your business. So I'm just wondering how you think about that, because there's probably people in the market that would, be happy to have such an asset. So I'm just wondering how you think about that.
Very good question. It's one of the things that is giving me, problems to sleep every day, right? But, it's really a different animal. It's a different asset. And if you ask us, whoever of the 4 we are here, no mistake, we say that we are not going to invest in refining assets for the zinc in the other areas. The reason is that the US is a very specific area for the zinc market. smelting capacity in US is very, 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 very low in comparison with the consumption of zinc in this market. The current North American, including Mexico or Canada and US smelting, is covering just 80% of the demand of zinc. So they are always based on imports and based off a problem that was the premium paying in the US or whatever that. It's true that for us that means nothing because we are willing to allocate our works produced. But if we produce maximally in US like 150,000 tons of works, imagine, and we have to allocate there outside US, at the end of the day it's possible, but probably it's not so profitable even. So the fact is that the asset was there, was coming for a big problem in the construction, and the fact it was that last year when we signed the ACR, we told them, guys, we are interested in the assets, providing the asset works. If not, we have nothing to do there. So that's why we went into that agreement of options to get the whatever. Now the situation is the asset is running, more or less 80 to 90% of capacity, but there is a particular problem, which is the inflation. You know, sulfuric acid is 3 times what it was 1 year ago, maintenance, energy, whatever. So at the end, the fact or the opportunity for us is to advance 1 year the investment was because private equity guys or hedge funds, they decided to say, okay, it's time, or we don't see that in 23 it's going to come because this is what happened. So at the end, we took the opportunity to negotiate and to buy the asset. It's true that 2023 probably is still the last year for ramping up, so we don't hope that it's going to contribute with a high EBITDA level, but it's going to probably in the range of 10 million or something like that is what we have in mind. And then we'll be back to the idea to 15 to 25 million, depending on the conditions of the zinc, whatever. So it's an asset that is not going to give us a big of profitability, and you are going to start to modelize. Probably the margin is like the aluminum, it's not going to be big. But in a quality point of view, for us, it's very important to allocate all the works we have produced. More than that, the green zinc is going to allow us to negotiate better with the steel makers there because we have a strong point that we don't have anywhere else. So it's a more need for that. It's like washing plants at the end of the day. We wash because it's more efficient, and for us it's easy to sell, sending all over the world and getting better margins. Here is a little bit the same, but instead of washing, it's going to be directly doing the zinc metal. Risk, well, we have a team that with this experience on this business, and then once the plant is running, we probably can spend not many time explaining what is going on there, because it's like we are explaining what is going on in the washing plants. We don't explain a lot because it's something that is like we sell zinc units. So for us, it's extremely important, the asset in this particular market like the US. But we are not interested in to invest $300, $400 or $500 million in other part of the world to do like that. This is the answer. I mean, so here is a specific, with a very specific price, a very specific opportunity. So that for us has been very, very, opportunistic acquisition, and we are very happy, really. We are explaining very well. Questions?
Maybe we can move on to one question from the virtual.
Sure.
As the macroeconomy slows, are you seeing decreased volumes to your sites, particularly in Europe, but also around the world?
Well, this is a question for the presentation of results, and so we have said we will say there is not affectation, especially in Europe, because the current situation of the steel makers. But the reality is that yes, there is a steel production reduction currently, but doing like this. No closure, permanent closure. I know one in Spain, the Sestao plant for Arcelor. The rest are like that, working on weekends, working on night, trying to get better prices of energy. Now, even with the prices they have now, they are running. So the deliveries are a little bit or few less, but we are not suffering a strong reduction in the current deliveries in Europe. This together with the normal stocks that we are managing at the plants, we are not having problems mainly, probably we are having lower level of stocks, but we are running without no problems in Europe. Asia, US is different animals. Once again, here we are running the plants at the 60-70% of the capacity in US, and it's like that. So at the end, the market is affecting the same way, but we are doing in that level without no problems. And in the case of Korea, Turkey also, I would say we can feel that sometimes they are producing much or less. But all in all, deliveries are not far from where we're expecting to be in 22. So this is the reality. On the zinc side, when we sell, it's very funny because the smelters are closing capacity, but normally are big groups, and they say, well, instead of sending the works to the plant, send the works to the port, because they're going to take it and put it in, I don't know, imagine in Australia, one from Europe to Australia to US, so they don't want to take out the material. So we are not suffering the curtailment of the capacity of the zinc side as well. How long is going to happen? How long is going to be there? It's going to be affecting us in the future? We'll see. Nowadays, the main problem we have, as Javier is explaining every time, is the energy cost and uncertainties that is coming. But on deliveries, at least for the next 4 or 5 months, we don't see a big change, even the current situation of the economy. No? More.
There's another one here. How is the European energy crisis impacting your business? Have you changed your hedging strategy on energy, I guess?
Well, as I explained it before,
Javier is an expert in energy.
I'm trying to learn about the energy. And we have recruited, as you know, 2 new board members, and both of them are specialized in the energy side. And the first thing we are learning about the energy is that nobody knows anything about energy. And one of the ideas is when the people say, how are the energy price? If I ask now, how do you think are the energy price? Are very high or not? Well, let's do, this morning in the Befesa we did an analysis. Which are the energy prices, the electricity prices today? And how compare with the energy or with the electricity prices we have had in Europe? And it's amazing because today the electricity prices are more or less around pretty close 100 euros per megawatts or whatever. The average price year to date has been more than double of that. And the peak price in September has been 370, so near 4 times. So are the electricity price today very high or not? The answer is depends. If you compare with the situation before the crisis, are very high. If you compare with the average price of the year to date, are very low. And if you compare with the peak price in September, are extremely low. And then the question is, how will be the prices during 2023? Nobody knows, but all the things we know about that is that the market doesn't expect big price increase until, let's say, summer. Today, all the warehouses are full, completely full. Will depend on how hard is the winter, but apparently in any case, we are not going to see big energy price increase until summer, when the warehouse will start to be at a low level, and then the market will start to buy again gas, etc., for the new year. So we are not very pessimistic with the energy price for 2023. No matter that, we are now, as you can imagine, preparing our budget for next year, and we are making assumptions to have a slight increase of the average price we have seen for the whole 2022. This is what we can say today, no?
Yeah, at the end, it's a headwind that we are suffering. That's why we're in the low part of the range of the results, obviously. But as Javier said, you can consider whatever for 23, but I think that is a good consideration to consider that is the same 23 than 22. What is going to happen? We'll see. That is an idea.
Sorry, I have a follow-up question on energy side. Do you include the price cap expected in Germany in your assumptions when you say that you expect a slight increase in energy?
And you mean for the growth?
Yeah, Germany will put in place a price.
Yeah, I know, but for the growth, we are not considering the current situation, right? I mean, we are considering, as I say, in more or less in all the variables, a kind of average for the last 5 years. Because you think in the cap for energy, in Germany it's going to help. In Sweden, the government probably is going to subsidize part. Every time it's going to acting for the short term. But once again, what is going to happen in 24 or 25 when the capacity is going to run, we don't know. So at the end, well, perhaps the payback, instead of being 5, is going to be 5.5. In 1 year, it's going to be in this level, and the cap is going to help. But if you enter in this world, you can get crazy,
But all the
long-term plans,
all the expectations are that after 2024, the energy prices in Europe will be totally different than the one we are living today. I'm sure that we will see again low energy price in Europe in 3 years or something like that. The problem is to go through this the next 2 years, no?
Thanks. Thank you.
Sonia. Here.
Thank you. Just one follow-up question on your net working capital. I think, Wolf, you referenced an average of 16 million as net working capital build up on the last 5 years. I think was pretty low in the first 3 years, and then in the last 2 it was a bit more, 30, 40. Can you just remind us whether anything has changed in the net working capital intensity, or whether certain regions like the US or China are more net working capital intensive, or is rather Spanish customers becoming a bit tougher on payment terms?
No, thank you, Ingo. No, we don't see much has changed on working capital usage to fund growth. And the analysis I provided there was, look, the last 5 years, when I look at that, we funded an IPO, we funded a large acquisition, et cetera, and so those were clearly some one-time costs. Those one-time costs we always reported in our annual report. If you sum them up, they're around 30 million. And those end up in the EBITDA to cash flow walk in the working capital other bucket. But it's not operational usage of working capital fund growth. It's really adjusting for these one-timers. And then you come out at that roughly 16 million. So we continue, there's nothing structurally going on. We think that we will continue to have a minor usage to fund growth, which is completely normal. And this is also part and considered in self-funding our growth plan.
In the ESG section, Rafael, you made a few points on potential, let's say, investment opportunities and innovation opportunities on ESG. In the sustainability report, you also talked a lot about using process heat to generate electricity or for other points, but I think that was not part of the growth opportunities you've outlined. Do you not see short-term potential there, or is it part of the normal maintenance capex budget to think about use of process heat, or is it just too small?
Well, this is an R&D project that we are analyzing at the moment, and I mean the CO2 reduction plan that we have in place will not require any capex. So with the maintenance with the recurrent maintenance capex, we can achieve those targets. And yes, this is a project like many others that we have on the aluminum space, for example, to recover hydrogen from the gases to use them internally. But these are part of the R&D initiatives that will be part of the CO2 reduction plan. But
anyway, it's a very interesting project that we expect a lot of this project. We are very motivated with this project. Jaime.
Hi, good morning. So one question regarding salt slags. So you presented a project in Europe, but I remember in previous calls there was also an opportunity to build salt slag plants in China. I would like to know if, because with all the projects you presented, maybe there is a lot on the table, but I don't know if it could be, if you can comment on the Chinese salt slags opportunity.
Yes,
in China, we are sure that we will see opportunities in China, but what has happened is that during the COVID, all this project has been totally stopped. Has been extremely difficult to build the plants. We were in the middle of the construction, but has been totally impossible without the travel to China to keep these contacts, etc., etc. Let's see how the situation evolves in China regarding COVID, restriction, quarantines, etc. And we are sure that sooner than later we will start to work again in this business opportunity there.
Yeah, we are not including this in the growth plan because we want to do a growth plan tangible. I mean, at the end of the day, we think that what we are presenting is something is there, but that not means that it's closed. If we see the opportunity in this period that China finally deserve a plan there, we will manage. I mean, for sure, China is a target in not only the zinc business but as well in the aluminum. But it's not in the part of the growth because we don't see now clearly or with a very good, concretion of the plan there. No?
Very clear. And maybe a last question regarding the treatment charts, which I know you put the visibility right now is almost impossible to know. But I mean, if you can provide us any color or
every time you ask the same, right? The only thing I can tell you, because it's public, is the spot prices in TC you see in the range of 260. If this is going to happen in 2 months, I cannot say nothing. No, seriously, too soon. The LME week has happened 1 week or a couple of weeks ago. Well, there was no settlement of nothing. Normally in this part we are settling quantities, by the way, and we are settling quantities in the same way that we have done in 2020, so 2022. So one of the things I can say is that we don't see, again, or the market is no matter the recession to come or whatever, I think no one is thinking in a very, drop of the production of the transaction. And with prices, no one wants to talk because it's too early. But it's like that, no? One say that the smelter curtailing production could affect to this. The other say that mining is not running as expected. We don't know, really don't know.
Thank you.
Maybe another question online about the steel scrap in Europe. How certain are you that there will be enough steel scrap to feed all the new EAF in Europe? Can you talk about the impact of hydrogen DRI on EAF steel making and ultimately for Befesa? Will the process need to be changed?
Yeah, good question as well. Yeah, it's true that our capacity, which is coming, switching on to the electrical furnace, in theory they will run with a scrap, but this is not entirely like that. I mean, it's like it's going to be a combination of DRI plus scrap. Probably the scrap availability is not going to be very big affecting because now even the blast furnaces are using part of this class for refining, for doing the alloys. So probably this scrap is going to be there. Which is true is that the new capacity or the new dust coming are going to come with less zinc-containing material because they're a mixture of the DRI and so. But in the average, we don't hope that it's going to be changed in the Europe. So well, looks a lot, but all the projects are not going to use scrap entirely. So we don't see that. It's something like like US. US is a combination of scrap and DRI. At the end, is more. If you want to substitute the blast furnace, you will go to the flat wall of the steel, which automotive sectors and so. So you need more things that properly scrap, which is using normally for the construction. So those capacity to substitute the blast furnace, for sure, are not going to use so much scrap, right? Like to affect to the European scrap market. We don't see it like that. I think that the European scrap market can absorb the new capacity of steel production in that route. The hydrogen at the end is affecting to them in the way they are going to produce the direct reduction iron more than us. At the end of the day, we are going to use the dust that they are going to produce.
There's another question on China. How is the zinc content in the dust evolving?
Well, good question. And again, now answering with the reality that we can feel is like it's a little bit better than we were expecting. So probably we can say the average in Jiangsu plant is coming in the range of 23 or something like that. And this is an average. So low zinc content, but as well, even using scrap steel makers with above 30. So it's a good average of 22, 23 that we are realizing now. Well, so this is a good positive news as well.
There's another question about India. Do you see any regulatory development in India?
Well, India is the next on the portfolio always. We are monitoring somehow the India developing, and there are two things there. Not a big change in the regulatory and less in the enforcement of the law there. Unfortunately, this country is not, despite the fact that looks, more developed than China or similar. I think here in the residues area is more far from the point that you have to think that you can get there and good contracts, and they are not doing very other strange things and so. So the enforcement of the law is not still there. Obviously, could be the future. Well, we'll see. We have to monitorize and to see what is the next step of Befesa in the regional area.
We need to leave opportunities for beyond 4 or 5 years, no? And aluminum in China, India could be an opportunity. So
yeah, no. The truth is that there are many of you or many people in the market asking for why Befesa is not searching for other kind of metals or things like that. Or business, but I think that there is still opportunities in the future, as Javier said, for getting some fun here out of the 5 years, the next 5 years. No?
I had the same answer on my tongue already, because look, what we presented today means we're going to be extremely busy for the next 5 years, and rest assured, we're going to be extremely busy for the 5 years thereafter. So. Yeah. I can honestly say I'm now a little bit over 8 years with the company, and there was not a single boring day. And the next 5 years there won't be a single one, and thereafter neither. So I think the video was great. We're showing this really great goes across the world and gets more stringent and stringent, and all of that brings opportunities for us. So I think great 5 years so far. The next 5 years are even more exciting, and thereafter will be again. So I think we're just getting into second, third, fourth gear, so to say. So we're ready.
What thing, Rafa?
Lunch, Rafa, or not?
More questions?
There's a final question. It says, how are you affected by labor shortages, and how does it differ between your markets?
Well, it's something like we have to make the difference again among the markets, right? So in Europe, we are not facing those problems, no matter if there is some things in, restaurants or things like that. There are a lot of problems with having people. In our case, I think it's not the normal ones, nothing spectacular. In the case of China, for sure, on Asia, we are not facing those problems. There are no problems. And the US, which is a real, some music coming from the problems of the labor issues. I don't know if it is in the particular cases or particular places where we are located. We are not facing the problems anyways to get people working. But yes, this is something that is in the papers, on the news all the day, but we are not facing this problem. Again, it is going to affect to us or not, we will see, but we are managing very well there.
Any final question here on the room? Okay, so I think we can finish now. Thank you all for your questions. We will now finish the Capital Market Day. I think for those joining virtually, if there is any question that hasn't been answered, I will make sure that we get back to you with an answer. We will post this presentation in the website later today, and the whole event has been recorded, so I think tomorrow, the day after tomorrow, you will have the access to the recording. And thank you for joining in person and virtually. Thank you for coming. To final remarks, we have a lunch ready here in the next room. And one final one, today is the birthday of our executive chairman. So Javier, happy birthday.